are you? Happy Monday. Wonderful week to all. Please give me some okay if you can hear me and you can see my screen. Hello to the Canadian friends. Here we are after the long weekend. Finally a normal weekend, right? All right, good. So let's begin, guys. Once again, wonderful week to all. Thank you for the confirmations. Let's start, and we will go over our positions running, see what's relevant for us, what's not, prepare all the setups for the coming days and weeks. But to start with, very important thing to remember: Federal Reserve this week, starting the testifying tomorrow, and continuing on Monday, publishing their decisions. The market is anticipating and expecting to see any hint coming out of the months of the Fed about the rates. The chances dropped dramatically for a rate cut, as the traders and the investors were expecting after the last NFP report on Friday. The numbers came good. This week we also have the CPI and the core CPI in the US. If the numbers there as well good, the Fed might not rush into cutting the rates as expected a lot by the traders, by the investors, and mainly by the President Trump. So that's why until then we might see the markets being a bit slower, without clear setups, some random shorter moves up or down, which might be reacted immediately in the opposite direction. So be careful with such setups, okay? And mainly don't force. Remember what I always say: in such days, if it's clear and your risk reward ratio plan in your favor, go with that. If it's not clear, wait. No one is forcing anyone to trade, only ourselves with our psychology. We always want to be more and do more and be more active and hopefully to make more money, right? But when the market will not move and the conditions are not clear, the big money is not in a flow in the market, we can't make money. Doesn't matter how much we wish, want, or draw lines. Remember that. So let's begin. First of all, for those of you who are here for the first time, welcome to our family. Two main things to watch. This is the trading report, which you receive after the live trading room. Make sure to watch this video of how to use this report. Here you would be able to find the most important webinars to understand the terms we are using in our trading, such as cycles, divergences, convergences, and so on. This is the full watch list. So basically what you do, you just click on the image and it opens for you with our expectations. Below you will be able to find the comments and a bit more of the explanation to each of the time frames we work with. What are the conditions we find there? Double cycle, divergence, triple cycle, divergence, trendline breakout, and so on and so on. This is a summary of what discussed in the live trading room. Okay, so that's pretty much it. And the second thing, make sure to watch inside the members area the video tour so you understand how to work with the members area for your favor, in your favor. So let's start. The first one on our list, let's start with the European pairs, the one that has to be updated. Let's start with the euro versus the dollar. This is the one that we were in the scan for buys. Double cycle with 61.8 level expansion on the second leg, bullish divergence in play, and mainly surrounding the psychological area of 110, slightly above, of course, but it was there. As per the cycles, each of the legs from the weekly was a cycle by itself on a daily. So that was a great start, and the most recent trend lines were broken where the euro created convergences. After that, we went into buys, and it was going pretty cold. What happened since? We got a blockage on the top of this possible range. I want to remind you where it all starts from. False breakout, a zone for a range, then another false breakout, the range extends, and this is the full period of range. Why this range is relevant for us? Because according to the weekly double cycle, we would expect the daily to behave as two waves correction or a range. Therefore, 1, 2, or some sort of a range. Range is also a corrective cycle. Okay, it's important to remember that, and that's what the euro still might be doing for us. So we reached the top, we blocked with this divergence, which then started the move down and extended on Friday as the NFP report showed massive numbers. So what's next? That's the main question. As per the cycle from the weekly, we are still good for two waves correction. We are still good for a range correction. According to the cycles, we should be looking for drop downs and buy opportunities. Now let's examine that from the technical view. Do we have the buy opportunity? So what happened since the false break and the higher highs? We got triple higher highs, triple higher lows, which is a great structure for a first leg of a potential dip correction upside. This is a structure of a bullish trend. Higher highs, higher lows. What happened since though is we got one straight leg, which is going, I will zoom in and you will see that, right to 61.8 Fibonacci of the whole movement upside. So what does that mean? My approach personally is always when we have a move up which is structured clearly in a trend, and then we expect a correction. Correction could be two waves or a range, meaning 1, 2, or some sort of a range. And then we are good for the continuation as expected. But here we got one straight leg through all the accepted Fibonacci retraces levels. This is a warning sign that the buyers, which show their force clearly here in this upside, might not be as strong as expected. So does that necessarily mean we are going down? Of course not. Does that mean we can fly from here? Of course not. This is a neutral zone by crossing the 61.8, which means very simply the market is telling us, be careful. The flow of the money is not obvious, is not clear, not by the buyers, not by the sellers. And it's very important to be able to read these things and to understand and not to force. Now, as per setups, we were expecting two clear waves and buys. We did not have the two waves here and the breakout for buys. We did not get clear two waves here because the trend line was broken before the second leg was even created. If we mark it this way, it will be forced because that's not official high, right? So it is a forced setup. Therefore, my always personal preferences in such cases, going neutral, waiting for the market to clean that up. As per cycles, the euro still should continue higher all the way up to 116. Many things will rely on the Fed and the words that will come out of his mouth, and it will happen starting from tomorrow. If the fundamental will line up in the technical approach, we will see the euro completing it its destiny rallying to 116. If not, this cycle might go and get extended, fully extended to bigger movement, meaning you can continue to here or all the way lower to 105. How will that develop? There is no way to predict, and we are here not to predict. We are here to trade facts, and the facts are that there is no clear price action, clear setup, clear structure in the market at that moment regarding the euro dollar. So I move, after all this long speech, sorry for that, move neutral. Just wanted to go over all the details as I take into consideration when in a position or expecting a position. Now, another very important thing we have to remember always, and you hear me talking about it day after day after day, listen to the market when there are signs against you. According to weekly cycles, we should have been going all the way up to 116. We still might, but on the way up, the daily triggered a bearish divergence. So this rally has to be managed at that point. What does it mean? It has to be managed by that point. It means stop loss to break even, partial cash out, trailing the stop loss with the swing highs, and so on and so on. Any sort of management you have in your trading strategy, but has to be applied. Why? Because when you rely on a main time frame for a cycle, for the direction, and one time frame for verification, and they lose their synchronization, they are not rhymed any longer, the market is telling you the momentum is getting weaker and might be gone. And you might find yourself in such times scratching the head, trying to understand what went wrong with a classical setup, but while the market gave you the chance not to lose. And many traders turn a good winner with a good risk reward into a losing trade by not listening to the market and by hanging on their beliefs and expectations and mainly wishes. So listen to the market. No one knows better. No trader, no analyst, no investors. No one. When the market gives you the signs in your favor and you have time frame synchronized, it's your time to be involved. And when this synchronization is lost, it's your time to listen to the market and to adjust. Remember that. So this is for the euro dollar. Sorry for the long speech. It was very important to go over these little things and put them down on the table, clean any doubts about that, and discuss about what has to be done. Because in trading, it's never only how to trade, it's a lot of how not to trade and when not to trade. Remember that. So that's it for the euro dollar. I'm going neutral at that moment, looking forward for clear signs to be developed or redeveloped. Euro Kiwi, we are bearish for a while, all the way starting from here. We were expecting this move. We got the move and we got it riding. So that was our convergence, rally, and continuation. So what's next with this pair? According to the long-term cycle, I would expect here continuous rally. Weekly had a triple cycle for us, which now potentially turn to be a range or two waves, but both scenarios with this bullish divergence hint us for continuation. We got the first rally, then we got a blockage by opposite divergence, bearish hidden, which was confirmed by the daily time frame, and we were expecting a little corrective cycle before the continuation further. So we got this corrective cycle. It was the first leg, but it took us all the way to the cycle levels. cycle reached, this is a triple cycle, right? Reached its 50%, game over. As simple as that. So what's next with this pair? Triple cycle normally is coming after double wave correction or at least some range correction. So to rush into trade right now doesn't make sense. I mean, in the buys. On the other hand, the sells already reached its destination and now develop divergence against. So the long-term trading as for now is over. It wasn't too long. It was pretty quick at the end of the day, but it was combination of weekly and a daily movement. We gotta move down, game over. Now we would be hunting for the next setups. Ideally, this style and to go and to ride the buys based on the weekly cycle. What to do on the short term? I wouldn't waste much time of that, but this is a special cycle. This was a classical area for us for the buys because of extensions of the first leg and the two big further, and the second leg and the third leg extensions. Bullish divergence all around, trendline breakouts, so we can easily expect two waves correction or some sort of a range. But this is for the short term. As per now, for the long term, the idea here is cash out, neutral, enjoy the profits, wait for the next setup. Now, for all those of you who are for the short-term trading, once again, this is what we currently have. The magnet zone of these two cycles, okay, classical area right here. We are right on the deviation zone, 167.50 as a psychological area. We got, as you can see here, to the clearance area, cleaned all the stop losses here. So based on this cycle, the 4-hour chart cycle, we can expect correction up to 38.2 or 50. This zone is where this should finish. After that, neutral will be waiting to see where the wind blows and how. And again, my personal expectations would be this for further continuation. It's too early to know and to judge will that happen. That's why I say expectation. Will that turn to be a reality? Who am I to judge? We have to wait for the market and to get it its confirmation. So Euro Kiwi done with the long term, short term accepted on the way upside to the 38 or 50 in two waves, and then game over. Euro OZ, another great ride for us. Started all the way from the 61.8 expansion of the double cycle. Now let me explain why this is so beautiful, even more than the Euro Kiwi. According to the weekly cycle, and I would like to remind you that we are here in a triple cycle, meaning if there will be no surprises by Mr. Market, that should turn to be two waves or at least some sort of a deep ranging corrections. The last divergence developing is bearish hidden, suggesting here a good sell. Daily has to verify. Daily did so by making double cycle 61.8 extension as we just saw. Great divergence. After that, we also got daily trendline broken and convergence. Technically speaking, it cannot get any better. The idea here is sell the rallies. We started with the 4-hour chart trendline breakout. That was our setup. And we said as long as the daily would not confirm the long-term sales, it would be a short term. But this short term turns to be a long term by going straight down without making any signs against on any time frame combination starting from 4-hour and higher. And this is a classical example how a trade that begins as a short-term idea for several days turns to be a trade that could be developed for several weeks or even more. So the plan remains bearish for the euro versus the Kiwi, sell the euro versus the Aussie, sell the rallies is yet the plan for this one. As per the targets, well, for a very long term, if it's developing two waves, we can expect it to go all the way down to 50%. And for the short term, if it's not, then the way that these two waves will be developed, we would make expansion from here to here with this as the correction. It would depend where the correction will end, and we'll figure out its target there. For all of you who are involved with this trendline breakout, as I always say, managing your position is extremely important. You do not want to wake up and see any random move, because whatever the reason is in the market, against you, and a great winner to turn a loser, that's not something any trader wants to see. You got your risk reward, you got your movement management. Management could be any of the steps: just trailing, just moving to break even to protect, cashing out partial. I love to cash out 70% when I have great risk reward with some signs against me. For example, anything you have in your managing strategy should be applied in such moments. You do not want to wake up to any randomness from the market, and that could happen when important news and fundamental events are about to take place. Okay, so that's pretty much about the euro versus the Aussie. EuroCAD, we are also riding a great sell from the zone of 149. Right now achieved even below right now the 61.8 expansion. Let me just find the pair here. So here we are, great move down. I want to remind you why we are bearish. This is a triple cycle. We are trading from the monthly chart, so a long-term trade. The bearish divergence that is in play, sorry, the spot number 1 and spot number 3. So we expect two waves correction. So far, so good. Weekly chart fits in perfectly. If this is the first leg from the monthly time frame, this is the triple cycle that confirms it to be the leg. Then we got some two waves correction or range correction, does not matter how we name it, and we got a continuation further. So the monthly is developing the second leg, the weekly fits in. As for now, no signs against. This is developing its leg, no divergence against, so the idea is still bearish. Daily time frame, getting closer to a possibility where we can face some extreme. Bollinger Band duplication after the second breakout. The first reacted immediately to the middle, which is not a good sign. After the second breakout, it's a straight movement. We are next to the 60, slightly below actually, 61.8 of the cycle, which is great place, and not too far from the 100. So this area, sorry, and also close to 145, which is an amazing psychological level. This is the area where I would expect see some fights and apply management, meaning cash outs. 4-hour chart has a Bollinger Band right, no false breakouts and higher highs at that moment. That's why any rallies are yet considered as a sell opportunity. What are the opposite signs we have to pay attention to, like turning signs? False breakouts and higher highs, or false breakouts and trend lines, or triple higher highs, higher lows. Then we have to put a neutral mode and cash out the trade. None of them is in play, therefore the trend continues. So EuroCAD is a great run for us and should continue lower. Now we are to the Euro Pound. Euro Pound, we have two waves and bearish divergence. Let me just mark it here. This was the little triangle ranging correction. Second leg, classical cycle level, beautiful divergence developing still. 4-hour chart previous week created these lower low scenarios. However, we still don't see the market gaining any momentum. The level is yet critical. Anything around 090 up to 091 is a critical zone. And my view remains looking for the sells. I dislike completely such price action, such lack of momentum. And my personal view in such is always not to keep full exposure. What do I mean by that? Let's assume you are in a trade with 1% risk or 0.5% risk, it doesn't matter. Let's just throw a number, one lot, just for the example. And the trade does not develop as you wish. It does not have signs against you, but also no momentum. No momentum means that the bears are not as powerful as we would anticipate and expect. What to do in such case? Drop exposure. So instead of one full lot, go for 0.7 lot or half lot or even lower. Why is that important? If it moves down, you still have enough to enjoy from a good ride here as per the risk reward plan. If it doesn't, your risk would be minimum, and then instead of 1% risk, you would end up with 0.8% risk or 0.7% risk or 0.5% risk, just for the case of the example. Why is that important? Because you know my approach. In trading, it's not about how much money you make only, but it's also and mainly about how much money you don't lose. Most traders believe that in order to become more profitable, you should make more. The reality proved it to be a bit different. Well, at least for me. It's not about how to make more. You cannot make more if the market does not pay. You can save more if the market does not pay. And here is where your management is so important. And if you are able to save even 0.2% only for any lack of momentum trade or any bad trade that you have the signs against you, then after 10 trades, it will be 2% more that you saved, which would add up in your total performance and in your growth. And after 20 trades, it would be 4%. You got the math, you understand where it's going. That's why it's extremely important to remember trading is never about make more, it's about save when you can. And when you can is when the market does not develop what you would expect it to. So the direction I'm looking to trade my setups in the euro pound is bearish. That means I ignore any buy setups that could come up with any trading strategy. Okay, and we're focusing on sales opportunities. Will I get them? How many will I get them? No one can predict. No one should predict. Look for a fact. You got it, you trade it. You don't, you don't. As simple as that. There are much better pairs that are moving, so sticking to one because it looks good isn't so smart, right? So that's for the euro versus the pound. Again, my view is to look for sell setups. That means I will ignore buy setups coming out of any trading strategy. Will be sticking for sells. And the new one that comes in the list for this week is the euro versus the franc. Now this one is a bit tricky, and I will explain. According to the weekly time frame, the divergence ticked up previous end of a week, but it was a dodgy pair that has its disadvantages. However, MACD still go pointing up. Cycle from the weekly time frame suggests it's upside as well. Daily time frame fits in this cycle pretty greatly and suggests us these divergence as well. That means we can see that going to the 38.2 of this double cycle, or even if we call that, if we name it triple or special, we can still go all the way up to 38, up to 50. So the idea is looking for the buys. There is one disadvantage, however. Despite of all the signs, we are still stuck inside these two candles range. Things I like much, much less. So what to do with that? This is more aggressive setup due to the things I just explained. And the best thing is to look for more confirmations. Let's take a look on the 4-hour chart. This time frame had triple higher highs, triple higher lows for us with a bearish divergence and 2 waves correction. 1, 2. It blocked with a bullish hidden divergence and since then broke the trend line. Long story short, we are good to assume that this should develop 2 waves correction to 38.2 or 50% of this one. Would that be able to develop further? Yes, but it will have to cross through the daily levels. And then we can talk about all the way up to the weekly cycle. At that moment, the signs are there, but there are also warning signs as the fact that the daily is still holding to candles range and the trend line is never yet broken, right? So, as always, listening to the market, listening to the careful signs, and adjusting accordingly. That means lower risk. Okay, so if your normal position is 1%, that would be less. So that's the last one from the euros. Euro yen, I don't have anything obvious and clear there, so not on my list. Any questions about the euros as for now? If yes, please write it down. Seems we are good. Okay, if there will still be questions about the euros, just let me know, guys. The next one's pound. So let's go over them and see what do we have with them. Pound Aussie, we are riding our sales for a good while now, expecting the 2 waves correction. Let me go over and start from the root so you understand where it all comes from. This is the cycle we are working with, expecting 2 waves or a range down to 50%. Daily cycle provided us first leg down, then correction, and at the end of this correction we went into sell once we went below the trend line. Since then the pair is paying and paying good. The question is what's next. So according to weekly cycle we still have the room to go. You drop Fibonacci on it and you find yourself the levels. Down to 50% is target for the triple cycle, or at least the 38.2, which is slightly below than 177. The daily is developing its 2-wave correction. 61.8 was already cleaned. Nothing obviously against, so it's good to assume we are heading towards the 100% expansion, which fits in perfectly the weekly 38.2. Therefore, bearish it was, bearish it remains. What will stop it from being bearish? Once we get the reversal signs. What are the reversal signs? False breakouts, convergence to the upside, 2 false breakouts and trend line breakout to the upsides, or any structure of higher highs, higher lows. Do we have any of this on a daily? The answer is no. Do we have any of this on the 4-hour? The answer is again no. Therefore, the pressure of this pair was and remains bearish. So for all those of you who are riding the sells, there is nothing here that will force you to cash out full position. So pound Aussie remains bearish. Our next one on the list, pound franc, according to the weekly cycle, we got the triple double and trendline breakout. We also got a false breakout on the bottom, false breakout on the top, which makes it a possible ranging correction. Right now we are right on the middle, on the bottom, sorry, of this range. In order for that bottom to have value, daily has to provide a cycle. The daily did provide a cycle, and we can face it as a double cycle or a triple descending cycle. So, oh, sorry. This is the double I refer to with 61 expansion, or triple descending, which could be go here. So that's pretty much what we have on the pound franc. Bullish divergence in play, and 4-hour chart had for us two false breakouts and higher highs. So long story short, as long as the invalidation level holds, expectations are bullish. Pay attention that the pound franc, as the euro pound, refuses to gain a bullish momentum, despite being all correct, technically speaking. What does that mean to us, the traders? That the bullish power that was expected is not there yet. Maybe there is not enough interest for whatever the reason is from the buyers. And this is where risk management is extremely important. If you are involved, tightening exposure is the right thing to do. I myself involved after the convergence was done and 50% retrace was reached. My trading style, not new to anyone. We also got here a bullish hidden divergence. So dropping exposure is what I do in such cases. Why? Because perfectly built trading setups are normally reacting by great momentum. This one refuses to do so. Who am I to fight the market? No one. So I listen to the market instead. And what the market says, there is no strong momentum. I am not looking to be right. I'm looking to make money, or at least to save money if I'm wrong. And when the market gives me these signs, I decide to reduce the exposure, as just explained. The view remains bullish, however, lack of momentum and attempts to create higher highs, higher low structure makes me go and just cut exposure. I want to remind you what cutting exposure means. Very simple. If you had one lot exposed, then do it 0.8, 0.7, 0.5. Okay, anything that fits in your risk management. So the view remains bullish with a careful sign next to it. The momentum is very important. It's not there just yet. Okay. Next was the pound versus the dollar. Long story short, we were looking to go and make buys above the break of the falling trend line. The breakout never happened, unfortunately. What did happen since is an invalidation of the most recent low from the daily time frame. That invalidates the cycle view. It was there before, takes it neutral. At that moment, I don't really have any new outlook that I can share here. There is a good chance that the pound dollar will try to get expanded all the way down to 61.8. However, this is a potential divergence on the weekly and potential divergence to be recreated on a daily with a fake convergence option. I never trade against such things. That's why I'm just going neutral. So pound dollar, where the expectations were for buys with this trendline breakout, never happened. We went below. And also the daily trendline breakout that we had to the upside here got reacted by one leg on the same daily time frame below 61.8 Fibonacci, one straight leg, game over. As simple as that. This is very important to remember. Even when the conditions look simply perfect, the market sometimes still disagree. And we have always two options: or try to force it and convince the market that we are right, or listen to the market. This is the smart option. Adjust our exposures and positions and choose our behavior since this moment accordingly. But to marry a position is the worst mistake trader can do. By marry position, I mean fall in love with this position and just carry it for as long as required until the market will decide to pay you. Terrible mistake. Unless you are doing some invest. For regular trading, it is a huge mistake. Unfortunately, traders do it. Hopefully, they will stop one day, understanding it's painful and pretty expensive. So as per the pound Aussie is the main mover, pound franc a bit lower exposure, same like the euro pound. This is what we have for the pounds this week. Rest of the pounds at that moment are not so obvious. One I'm looking at is pound versus the Kiwi. Still trying to figure out the price action. Not too clear to me. That's why it's on the waiting zone. We are going to the Pacifics. We have several Aussie franc and Aussie dollar. Let's start with the Aussie dollar and what do we have there? Triple cycle from the weekly time frame with the bullish divergence, making it an expectation to go up. Daily time frame fits in the most recent leg. It could be broken this way, of course. We got the trendline breakout, we got the higher highs. There is no convergence in play on the MACD, but the principle of higher highs is there. So what do we have since? We had a false break, trendline breakout, beautiful rally, which was blocked by these two tops and a bearish divergence. 4-hour chart confirmed it by making, where's my line here, by making a bearish divergence. Now this is still fits in perfectly in a structure of triple higher highs, higher lows. We can still get it to waves and continuation. We can see that making a ranging correction as well. Too early to know how the short term would be developed. So the short term is irrelevant at that moment while the divergence is bearish and the higher time frames are bullish in terms of cycles. So the short term is not tradable at the moment. Long term is the only one that is in play. And the one that I referred to was the break of this trend line. That's pretty much it. holding a bullish view here. Invalidation for the long-term view is here. Okay. And the OZ versus the franc, another very nice opportunity on the list for us. We have our cycle. Again, it could be broken as double or triple. The divergence is in play. We have this one-time spike there, which makes it more aggressive. The daily time frame has the trio by itself with the bullish divergence and the trendline breakout. This is where we are bullish, since what is expected here, according to the weekly cycle with daily verification, we would expect corrective cycle, which could be two waves or a range. Range is at that moment unlikely. Why? Because we don't have any false break on the bottom, and any range begins with a false break on the bottom, then possibly false break on the top. Here we don't have it. So here very likely we are facing the two waves. In order for that to become two waves, the first wave should be cycled by itself on a lower time frame, and it does. So buy retraces was and remains our plan, also good for the short term, of course, and also good for a hold with the break of this trend line. Unchanged. Next one, and a new one on the list. Aussie Kiwi. What do we have on this pair? We have the special cycle from the monthly with a false breakout on the bottom, false breakout on the top, making it a ranging correction as just mentioned in another pair. We are on the bottom of it, and in order for that to be valid bottom, it has to be cycled on the lower time frame, and it is. So what do we do in such cases? Going lower and looking for buy opportunities. So we got here sort of two waves with bullish divergence in play. That of course could be broken as well as this, with this bullish divergence in play. And the most recent trendline was broken to the upside. And the 4-hour chart has the structure of, well, trying to create a structure of higher highs, higher lows. From my point of view, as long as this low holds, that's what I would be looking for. Bullish hidden divergence could be in play. Two waves could be in play. Looking for buy setups. That's for the Australians. As per the New Zealandians, New Zealandian CAD, we were under bullish correction on a daily time frame. Where's the New Zealandian CAD? Here we go. We got the first wave. Then the expectation was for a correction and second leg. But the correction never provided this buy. Again, no two waves, no trendline breakout. Nothing came in play. So right now, what do we have? Breaks through all the Fibo retraces, no trend lines, no divergence, no interest of this pair at that moment. Should we go bearish as per the long-term expectations? Theoretically, yes. But the fact that the daily time frame is still under potential divergence hold and deeper correction to be developed, and just a little bit more expanded divergence before deeper corrections, make me simply lack of interest and going neutral. We do not have any good reasons at that moment for buys. We have warning signs against the sell, the best place to be involved with such pair is to sit on the fence. Of course, just a metaphor, yeah? Sitting on the fence, doing nothing, just watching. So New Zealand and Canadian is removed from our list. Personally, I did not find any other New Zealandian pairs to be interesting. Before I move on to the dollar exposure pairs like dollar CAD and dollar yen, if you have any questions, guys, please write it down. Okay, no questions. So, or you are just a second, too scared, or everything is clear enough, which hopefully is the thing. Good, so let's continue. Dollar CAD, dollar yen. Dollar yen, we are bullish with the break of the trend line, expecting it to go and make its correction. So, oops, sorry. Here we go. Break of the trend line, retested previous week, and by making this cycle, making us the corrective legs in play. What are the levels we are heading towards? 38.2, which is getting very close, would be a good place for partial or at least other management. And the 50% could be the final destination for this one if we break it into triple cycle. Not sure how triple is valid here, to be honest, in my personal view. That's why 38.2 would be a good place to make the cash out from my point of view, especially if this will turn to be a bearish hidden divergence. So that's pretty much it. Nothing else and new to do here. Once the daily becomes a bearish hidden and the 4-hour hits this as divergence, cash out, game over, looking for the next opportunities. Dollar Canadian, we have been involved in a long-term sell, making these two waves. Our involvement got in play right here with the bearish hidden divergence. We got a beautiful ride since then, paying around 400 points. Now we are facing a slowdown, a false breakout, most recent trendline breakouts, and mainly psychological powerful zone of the 130. Daily time frame has this divergence developing as well. As I always say, 1 plus 1 is normally giving us back 2, right? That's again a metaphor. 2 reasons to get out, getting out. The sells are over for the dollar CAD, and from the surrounding area of 130 in this given duplication that derives from the weekly time frame, the 130 becomes a valuable area for possible buys. And I would be looking for bullish setups from around the surrounding area of 130. Of course, it could be slightly lower, no problems with it at all, but also not forcing, waiting for a clear setup. That's my dollar pairs. Gerard, dollar franc. Now, dollar franc is a pair I've been asked a lot about. What's my view here? Now, I'll start, if you don't mind, from the higher time frame. My personal view from the higher time frames, we are here going for long-term buys. Now, on the short term, we have been involved in the sell for a few weeks, and once we reached the 50% from the weekly, it was a couple of weeks ago, I think, we reached the 50%, game over. we went neutral. So the question is, what's next with this pair? We don't have any clear cycle in play from the weekly. The only thing we can find here is kind of a range. If this is a triple cycle, then the correction should be two waves or a range, and none of them are yet obvious. The only thing that is kind of obvious here, we are still holding the structure of higher highs, higher lows. This is something that is obvious. So the higher time frame doesn't really, the weekly does not really provide us the buy opportunity. The daily, this is what it had for us. None of the legs, not this one, not this one, and not this one, gave us clear two candles rule in play. I dislike such price action. I don't know how that should be read in such structured behavior. That's why my view remains neutral. Personally, I would be looking for buy retraces, but it does not mean I think it's already good and legal for the buys. I don't have a clear structure. I'm not planning to trade it. I think buy drops should be the right thing here, but again, I'm neutral. I think we have much better opportunities there. So that's from the Forex view. And we have some commodities in play. Let's start with the long one. We have the coffee going on with the trendline breakout. And then for those who missed, 98. Of course, protection is in break even. This is for the invest. For those of you who are in the shorter term, two waves, bearish divergence, you know what I always say, cash out. Cash out is the right thing to do in such cases, at least partial. And for the long-term invest, we are in break even. The cycle did not change. Short-term corrections are acceptable. We would expect further continuation upside right after that. Gold and silver. Then I will answer other questions. Okay, guys. So gold and silver. What do we have in gold? We are getting very close to the 50% of this weekly cycle. Right? This very likely sooner or later would hit as divergence, and that would be a classical place to cash out and go neutral, waiting for next opportunities. Weekly is still developing it, no divergence against at that moment, and the trend line is holding. So my personal view still remains we should hit one more high, likely. And the way I see that on the shorter view, the daily had an extreme. Let's just draw it. Sorry. Here, as you can see, this is extreme divergence in play. So short-term retraces are very possible. Two waves or ranges. And after that, I think we are going to one more push again. Then it will very likely be over. Where's that? Silver. What do we have on the silver? Triple, double, bearish hidden, break of trend line. Currently, the setup is in a direct contradiction to the higher time frames, which are for buys. And as you know, and as I always say, higher time frames, once they lose the synchronization with the verification time frames, game is over. And that's why currently I'm going neutral on the silver. Oil, I see nothing in play. And natural gas, we have also an invest running here. Those who got triggered slightly above the 210 and those who got involved with trendline breakout. No changes with this one. Stocks, we have one running in invest in a Deutsche Bank. Again, nothing is changed there. They are making a lot of adjustment inside. They say they are going to stop trading stocks. They are cutting positions and so on and so on. I do not see any reason to make any changes or additions or any actions with such a long-term investor. Vladislav, if this is the question, then my answer is I don't see any reason to increase, decrease, adjust, or anything like that. Nothing there that really suggests we still lack of higher highs and any good confirmations for that. Jana, sorry, Swiss yen. No, I apologize, but I have no read on this pair. I have no clue. Honestly, no idea. I have no read here. I was trying to. Clueless. Hello, Said. Hello, Said. Good to see you. So that's as per our list, guys. Okay, now one more addition in play for us. This is the Ripple. What do we have on this one? After the forming structure of higher highs, higher lows, we are currently at the bottom of the consolidation. It's not a ranging cycle as we do not have two false breakout. So this is only consolidation stoppage. This is a bullish hidden divergence. And the 4-hour chart provided us the two waves with the bullish divergence and false breakouts. In play, trendline breakout, higher highs. So I am bullish on my view for Ripple. And that's the only one I currently have from the cryptos. Ahmed, what do I have from pound yen? I don't. I think we're getting close to the buy zone, but again, no official signs. Take a look. This is a special cycle, right? 261.8, full expansion. The divergence is developing, but no false breakouts and higher highs, and no three higher highs, higher lows in play. Not even most recent trendline broken upside. So I wouldn't deal with that yet. I think this is how it's going to be developed. Too early for action from my point of view. So guys, that's pretty much it. That's what we have for the beginning of the week. I want to remind you once again, Fed starting from tomorrow, have a clear patience and focus on what's to come out of there. A hint for a cut despite the good news, and we can expect anti-dollar movements. If the Fed will say there are no reasons for a cut, dollar could continue and gain strength, and that could be deep. So patience must be the most important thing here. Thank you very much for being here. I wish you a wonderful week, and I'll see you on the Telegram channels. Bye for now.